As we reported, existing home sales at their highest level in 2.5 years. The National Association of Realtors says sales were up a record 10.1%. So is real estate rebounding, and what does this tell you about the overall economy? Let's ask Shari Olefson, real estate attorney at Fowler, White & Boggs. We also have Mike Larson with us, real estate analyst at Weiss Research, and CNBC's Diana Olick is here as well. Shari, let me start with you. Inventory down to a 7-month supply. I think about 6 months is about in balance. Is this a good sign, or is there a big shadow inventory out there waiting to come on?
Well, you know what, Melissa, you're right, both. There are rumors of a shadow inventory, which we verified to some extent, but existing home sales, good sign, definitely a good sign. 85% of the market, up over 10%. Some are attributing this to the tax credit, others to low interest rates. Personally, I'm going to credit good old-fashioned prices, which continue to come down and are finally at levels where buyers are buying. But like you said, the real question, the real issue here is that 7 months inventory, which is almost normal. And the question is, will supply continue to be somewhat level with demand as we go into the next year and new homeowners want to sell, and we've got continuing adding to this inventory with the foreclosures in the distressed market.
Mike, to what extent are you able to look past the fear that this tax credit might have ended and that we've brought demand forward?
I think the tax credit is really the icing on the cake, not the cake itself when it comes to what's happening in the housing market. It's definitely spurring some extra sales, but when you look at all the imbalances we had in housing, what it costs to own a house on a monthly basis versus rent, or what house prices were versus incomes, those ratios were way out of whack 4 or 5 years ago, but in many markets now, they're much more in line with historical averages. So I think that housing has fundamental value now because of the plunge in prices that we didn't have for a long time.
Yeah, Diana, I mean, that's an interesting way that Shari set it up, that it's interest rates, rebates, but also lower prices. Which do you think is the driving force in these numbers?
I think they're all driving force. You've got a lot of government stimulus in this market, the tax credit and the low interest rates, and that's all going to expire at the end of April. Now, these numbers, though, were extremely good, extremely positive, because they were not just seasonally adjusted increases. They were actually raw data, raw number increases in home sales. My biggest question in the wild cards is regionally what's happening when you start to see those foreclosed properties increase, come onto the market, the banks get through the process of modification, and those that don't get into modification come on faster. Because in the West, we're hearing a lot of anecdotal stories of investors buying huge blocks of properties that don't show up on the MLS, don't show up in the realtor surveys, and inventory is getting very low out west, which is where all the distressed properties were. So there's something a little squishy in these numbers that I want to see over the next couple of months how they play out, but there is no question it's a good sign in sales due to prices.
So it sounds like things could be even better than it looks by what you're saying if people are buying up huge blocks of properties.
Well, that's investors are buying up huge blocks of properties. We're talking possible, and we're still looking into this, who's buying them up. But that may be people looking to rent them, and we know the rental market is very bad, or people looking to hold on to them, investors, hedge funds, larger groups that are looking to hold on to these properties and then release them onto the market at some point when they think that housing has recovered. But again, you're talking about a lot of empty houses out there that, you know, nobody is buying that's going to live in them, or nobody's going to be able to rent. So I want to see that play out throughout the winter to see if we've really hit total housing recovery. What I do like in these numbers, however, is that we're starting to see the higher priced homes moving a little bit more, which we hadn't seen before. That's the move-up buyers. When you sell the low end, guess what? You can get into the higher end.
Shari, what's your view if you look past these buildings as homes and more as assets? I mean, at what point can you start thinking of them as any other asset that might rise on the liquidity argument or the inflation hedge? I mean, it was the 70s and 80s, of course. I mean, they were the great inflation hedge. They divided society, those that owned their own homes, those that did not.
Right, right. Well, Simon, that's a great question, and that's really the million-dollar question going into 2010, because as we know, most Americans have most of their wealth in their real estate, or did have most of their wealth. And going into 2010, we've still got several variables that are going to play into what's going to happen to that net worth. We've got the commercial real estate market, which is still a big question. We've got 7 million homes currently in the foreclosure process, and another 10% somewhere around 60 days behind on their mortgages. We've got these government programs, which, you know, as we've seen, every time a new program is announced, the market reacts, and as new programs unwind, the market will also be reacting to that. And then we've got rising unemployment and negative equity, so there's still a lot that needs to fall into place before we see where home values settle in.
But, Mike, you know, we heard one of those pieces fall into place a little bit this morning. The NABE study this morning was a little bit more optimistic about payroll, saying that they thought we'd actually see job growth in the second quarter of 2010, that it would be flat in the first quarter, but job growth in the second quarter and maybe not a jobless recovery. Does that change your outlook for housing?
Well, I think in general it's important to emphasize the gradual nature of this recovery. While I do think that we're stabilizing and some measures have probably bottomed, things like sales rates, prices still have further to fall as a result of ongoing foreclosure inventory coming into the pipeline and still elevated unemployment. But again, I do think we've turned the corner on sales. We've probably seen the absolute low or close to it in construction. And from here, things are a lot more stable than they've been in quite some time.
Okay. Thanks, guys. Thanks for joining us. We appreciate it.